enlighten you with some great news is it's sunny today in Arizona. It's not freezing and raining and gloomy. So that is something to be grateful for, right?
Yep, absolutely. Well, I'm here in Orlando, Florida, and I'm wearing, my workout pants, but I think I should be in some shorts because it's super warm weather. So definitely grateful for that. And it's been a while since you and I have had a cup of coffee together. So here virtually, it's a new thing, but even better. I'm a weird one. Like even if it's 112 degrees outside, I still have to be drinking hot coffee. I cannot do the whole cold coffee thing.
I like to get it down as fast as possible, so I like cold.
Awesome. Well, I'm glad. I think that it was such a good idea that you had for us to do this, to really just put the facts out there about what's going on in the real estate community. And I know you have some like really awesome slides to share that are from very well respected sources. So it's not like you just Googled this information and you're putting it out there from unreliable sources. So like I'm really excited for you to be sharing with us all.
Yeah, and they're not my opinions either, or we're not going to talk about how to cure the virus, but we will talk about some virus stats because there is light, with some of the stats when we look at them. So what I want to do first is go through the state of the Arizona real estate market. And we all know that real estate is local. So this is just Arizona, and other states could be, their real estate market can be a lot different. So I'm going to hide you for a second, Christine, and then we're going to reconvene after. Can everybody see my screen? Okay. So what I want to go over first is I'm going to be sharing with you where we are at in the real estate market. And then after that, I am going to open this up for Q&A. So first of all, I'm going to talk to you about one tool that I have been using in my business for a long time, well over a decade, but as of the recent years, all the time, and as of the last week, hourly. So what this is the Cromford Report. And the Cromford Report has something called the Cromford Index. And what that does is it measures supply and demand and then gives us this index that we can know where we're at in either a buyer's market, are we in a seller's market, or are we in a balanced market. And if you see this little arm wrestle here, 100 means we are in a balanced market. And if we're over 100, we are going to favor the seller. If we're under 100, we're going to favor the buyer. And just to put it in perspective, in 2008, we got down, or 2010, we got down to like 30 or 40. So obviously very much a buyer's market. And I'm going to share with you where we're at today because we have been a really long time in a seller's market. Right now, our market index as of yesterday was 240. We have a long ways to go to get to a buyer's market, right? If 100 is balanced, we're at 240. It's obviously imbalanced. Now, if we look at the two indicator supply, we're at 44%. And that has been the biggest pain point in our real estate market is we just don't have enough supply. And I'm going to go into why we don't have enough supply and how can we get more supply? Are we going to get tons of supply? The other part of this is demand. So demand is at 107%. Good, strong demand, but not crazy amount. So low supply, good demand, and combine those two together, and it is a seller's market. Just so you can put into perspective where you're at in the valley, if you're in Avondale, Avondale is a very unique situation. They haven't allowed building there for a long time. They're very strict, and they've always had a super high Cromford index. But Glendale, Chandler, Gilbert, super seller's market. As we go down the list, everything is a seller's market, and even Paradise Valley, a luxury market, we've actually seen the strongest luxury market than we ever have here, still at 180 or 178. This is where we can see this Cromford index over the years. And what I wanted to point out, and this is it was extremely enlightening to me, so I would imagine it's going to be extremely enlightening to you. We all know the market crash of 2008. The prices did not start to really go down until 2008. But whoa, what was happening here? It was early 2005 when we start to see demand decrease. It decreased, it decreased, it decreased, it decreased, it decreased. And it all the way into 2006 is when it actually started to go up. 2009, it started to go up. Even though the market was decreasing in 2005, we didn't see prices take into effect until 2008 and 9. 3-4 years later, after the market's demand went down. So there's lead measure and lag measure. And it's very important to know that, because everybody that's saying prices are going to go down and we're going to go down, and they're trying to compare it to this, even if prices do come down, and I'm going to explain why I'm going to explain why that prices really can't come down overnight. But certainly, even if they were to come down, it would take a while, and we can actually predict what prices are going to do over the next 6 months by just monitoring this amount. So I am psychic to the extent of 6 months. I'm just a little short-sighted because I can't see where we're going to be 10 years from now. This is where we started our year off. Crazy. Out of all the years that we're looking at, really what I want to show you is we went through this high sales of the last fourth quarter last year. And typically we see the fourth quarter kind of dip. We didn't see that. We just kept seeing it go, 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 go. And then this year we actually sold so much inventory in the fourth quarter of last year that we started out so undersupplied. That's what's caused all these multiple offer situations. Long-term perspective, if we think like, oh, the market just went down in 2008, nothing's happened since. No, there's been a lot of ups and downs in our market. Why did our market go up so much in 2005, and why did it go down so much? And this is the big thing. In 2005, we had a lot of false demand, meaning people never meant to live there. People were buying homes, 10, 20, 30 homes with no intent to live there. And in 2009 or 10, there was something like 16,000 vacant houses. And it was really easy to get a loan. If you had a pulse, you can get a loan. Another important thing to see in 2005, if you didn't want to buy a house, it was okay, because you can rent a house for super, super cheap. Nope, not today. Rental markets are at the highest level they've ever been. My daughter just bought a house, and as she was leaving her little one-bedroom condo, her rent went up from $1,400 to $1,600. She bought a home, and her mortgage rate is now about $1,300. So just so you could see where prices, when prices dip, they dip after the demand has gone down. So if you're just looking for prices coming down, you're going to learn about it 6 months before I knew. What affects supply? New home construction. So if we built, and I'm going to show you how we overbuilt in the recent past and how right now we're underbuilding for the amount of people we have here. Appreciation, depreciation. So in 2006 and 7, or actually 2008 and 9, when prices started to go down, if your equity went down 100 grand or 200,000, you were like, I just want to, even if you didn't have to foreclose or short sell, you might just be like, I'm going to walk away from this because my value went down so much. Foreclosures, obviously, if the foreclosure rate increases, we're going to have supply increase. When a whole bunch of people leave us and don't move in, then we would have a lot of a lot of supply hitting the market, any kind of problem in life, marriage, illness, death, job losses, tragedy, anything that is a distress sale. And then consumer sentiment. If sellers think like this is the height of the market, they might sell. I want to point out that this is the building. So in 2004, we were pulling 52,000 permits a year. 47,000 in 2005, 32,000 in 2006, 24,000, and it goes down. And even though we've gone up in permits, we're still not building enough units because we have 1 million more people today than we did in 05. But we were building so much for so long that we had so much new home inventory to get through. Now, what affects demand? Interest rates. You're not just buying a house at the price, you're buying the interest rate. Appreciation and depreciation, if prices are going up, you don't want to have to buy a home for $50,000 more next year, so you might buy today. Relocation inbound, and I'm going to show you in just a minute where we stand and how much relocation we're getting here in Arizona. Employment income. That was a big problem in 05. Most homes weren't affordable. Now we are not having that issue. Homes are affordable. Tightening lending practices, and right now, over the last week, this is actually shown to be an issue because it's fluctuating every day. Population growth, and again, consumer sentiment. So if you're feeling good and positive, you'll buy. If you're scared, you may not. This is just to show you how our population has been since 1980. And a lot of people won't know this, but we did not start to really build here in Arizona, growing Arizona till 2005. And 1950s. In the 1950s is when Arizona started its boom. And if you want to know why, it's called AC. And if you're here in Arizona, you know you need AC to make it livable. Arizona right now is the third highest state for relocation. Idaho, Boise, Idaho, Oregon, and then Arizona. The lowest 5 states for the top states for people moving out: New Jersey, Illinois, New York, Connecticut, and Kansas. I didn't see California make this list, but here in Arizona, we border California. I am a Californian. I will call myself 17 years here a native now in Arizona because that's what I feel like. But we have more Californians moving here than any other state. We've actually seen a huge increase in population from California. When I told you a few minutes ago that we not just buying a house, we're buying an interest rate. At the height of the market, our average price point here in Arizona was $324,000. Today it's $318,000. Really, really close. But if you would have bought in 2006 at that interest rate back then, your mortgage rate would have been $1,854 a month. Today, at today's interest rate, you'd be paying $1,300 a month. So about pretty much the same house, but your mortgage is $500 less because you're also buying that interest rate. I would not compare our market to the market that crash that happened in 2008. In 2008, it was a real estate specific problem and a lending problem. This wasn't a recession over all of the country. It wasn't a national catastrophe like we're dealing with right now. But if we just want to break that down, let's look at the different circumstances. In 2008, we were overbuilding, we were spec and buying. There was a lot of fake buyers out there, and it was very false, and that's why we imploded. Subprime lending practices, test your blood type, people that were dead were buying houses. It wasn't affordable. We overbuilt, and because of that, we had the supply overload, especially when all of those people that weren't living in the houses, all those fake homes came to market through banks. We also had back then a very volatile rental market. We would have to take tenants with 15 cats or multiple evictions because that was the only people that were wanting to rent. 2020, we don't have false demand. They're real people that have pulses and are living in their houses. We actually have more people here than the amount of supply. You actually have to qualify in the last 12 years. You couldn't just, it's not just blood type and heartbeat. You have to have W-2s, tax returns, bank statements, a good credit score. So we've had much tighter lending and appraisal practices. I have not been able to call my best friend appraiser since 2005 or 2006. We've underbuilt for a long time, and this is becoming a big problem. We have a lack of skilled trade. Cost of building has been through the roof. We have a lack of land unless we're building on the outskirts. So this has been a problem that we're not just going to be able to solve overnight. This is going to be a continued problem for a long time. Major, major lack of supply. We've had strong job and income growth, strong population growth, and the highest rental rates we've ever seen in history. Now let's talk about the corona. Unlike the market crash of 2008 caused by the real estate will be an innocent bystander of this virus. But let's talk about some of the negative things, because it's not going to be all positive, it's great. Yes, this is going to affect us. Investors will probably lose some enthusiasm for additional purchases. However, if they've got a lot of their money in the stock market right now, real estate's probably looking really good. Other buyers might defer or cancel buying because if they've lost their jobs, or they're scared of losing their jobs, or their hours got cut back. Extremely low mortgage rates, though, may compensate for this slowdown in demand. Sellers may be less willing to allow strangers in their home for fear they may be carrying the virus, and this has happened with a couple of our sellers, and that's why we've also taken precautions for this. New home builders, we've already said we've been underbuilding. New home builders may experience shortages of supplies, and build times may extend. So this is actually going to hurt our supply, and which is the supply is a major factor of that, the prices. And then people are self-isolating. If you're isolating in quarantine, you could do a virtual showing, but you're not as likely to be going out and seeing houses. So we are expecting a slight reduction in supply, thus balancing some of the drop in demand. And overall, we anticipate that sales volumes for the next several months will probably slow down, but it's still going to be most likely a seller's market because of that Cromford index I showed you earlier being 240. We have a long way to go to even hit a balanced market, yet alone a buyer's market. So unless we have this crazy amount of supply hitting the market, which is not likely, and we need a lot of that supply to just be balanced, probably not going to see too much effect on prices for at least for, even if it took a couple of years to get there. And I've been through this before. I was like last woman standing in my real estate office, or last agent standing in my real estate office in 2009. We're going to see those 60,000 agents, especially the ones that got into real estate for freedom and easy money, because those are the two things you actually don't have when you enter real estate. All of the people that have gotten their license because they love HGTV, those agents are going to go bye-bye just like they did the last time. And we've always had a crazy amount of real estate turnover here in the industry. You do need a high level of grit, and you've got to give it 150%. Unfortunately, and it's sad, and I love my industry, but there are a lot of people that got into real estate for the wrong reasons, and those people will be exiting. I'm sorry you can't see this graph very much, but when we talk about what do we compare this to? Obviously, we cannot compare it to a past quarantine. There is no past quarantine. We've never experienced this as a nation, but we have gone through catastrophes. We've gone through wars. 9/11 would be the last thing that we can really compare it to in my real estate career and lifetime. And actually what this graph shows is after 9/11, when the stock market is volatile like it is now, prices went up every single year until the market crashed in 08. This is what we've seen so far. We really can only track the lead measure, meaning all of the showings and listings hitting the market. Prices haven't done anything yet, of course. We still have a strong amount of escrows. People have to live somewhere. You have three choices: buy, rent, or pitch a tent somewhere by the freeway. And most people are going to pick one of the two. Are they going to buy and actually pay less and at least own their house, especially if they plan on keeping it long term? Or are they going to rent and pay a higher price and they don't live there? But those are really the two options. Our listings under contract are showing signs of stabilizing instead of growing that fast. So last year from February 16th to March 16th, we grew 12.9% in sales. Over the course of February 16th to March 16th this year, our sales have gone, our listings under contract went up 9.7%. I also know that part of that figure is going to include we've had a lot lower supply of inventory. And some sellers, we have seen some sellers up 6% in the past week, just temporarily take their homes off the market. A lot of them some of them don't want people in there. Some of them want to just wait out to see what's going to happen with quarantine over the next couple of weeks. We've also seen rental homes increased by 16%. So some people are like, you know what, I'm just going to rent my home out. I'm getting a really good cash flow instead of selling. So I'm just going to end this here, and then I'm going to open this up for Q&A. So the myth that prices are going to fall is all based on emotion and fear. There's little analytical data to back it up. So if we take our opinions out and just look at the numbers, obviously anything can happen. You know, we live in a uncertain and disrupted world, especially right now. But a fall in home prices is still looking very unlikely from the numbers we have today. Supply is likely to go up. So a balanced market in our MLS, we should be seeing between 40,000 and 50,000 homes for sale. We currently have just under 11,000, so an increase in supply is a good thing. We need it. The supply is unlikely to go up enough to meet buyer demand or exceed buyer demand, at least in the near future, over the next 6 months, a year, 2 years. Housing demand is created by existence of people and increases when more people turn up. And then it decreases if they go away. So it's really good here in Arizona that we're the third top state for relocation inbound. And in 2005, the people were fake. In 2020, they're very real. And it's been very favorable with families and individuals moving to Arizona from other parts of the United States. So all of the indicators for our central Arizona housing market still remain very healthy at the moment. And I am monitoring this on a daily basis. And I know that a lot of us, I'm no exception, have been very scared, but there's no cause for panic. And if you are delaying a purchase because you think the prices are going to come down, you're probably making a poor decision. So with that being said, I am going to hide my screen.
Awesome. Thank you, Jen. Yeah, a lot of definitely food for thought that you just shared with us in those slides. And while we wait for some questions to pop up in the comments, I will just share with you guys some of the stuff that I've been hearing from our agents. I manage all of our outside sales agents. I'm very close with our operations manager, our closing manager, our listing manager. So I have a pulse on what's going on a daily basis as productivity in real estate is impacted by the coronavirus. And I can tell you that over the last week and a half, with the exception of maybe the last couple of days just being a slight decrease, all of our agents are really feeling like this is business as usual. And in Arizona, this is high season for us. So we do have a lot of snowbirds that are in town, second homeowners making purchases, and our agents, their calendars have been very full. We have been very conscious about the way that we're showing properties and the way that we are servicing our buyers and sellers, but it really has been business as usual. And I think that's because a lot of buyers really are recognizing that they're not just buying a home at the purchase price. that they are purchasing a home based on that interest rate. And even though it's a seller's market right now, that low interest rate that a lot of the buyers had locked in is giving them significant purchasing power. And I think that buyers right now, the savvy buyers, are choosing buying over the pitching the tent option, right? Now, I think in the last week and a half, since there has just been, more hysteria, heightened hysteria about the coronavirus, we've actually only had one buyer cancellation, and we have, I think, 55 or 60 open escrows right now. We've only had one buyer that has pulled out at at the inspection period, just because they had some uncertainty and they had some other life situations that really weighed heavily as it pertains to the coronavirus and their job and their income, that sort of thing. I will tell you, I just pulled a hot sheet this morning, and we had 650 new listings hit the market in our MLS. So I mean, this is the data. I'm not making this stuff up. Sellers are not discontinuing to put their homes on the market. We have received a couple of calls here in the last couple of days. We call them list me's. Some people that do have some uncertainty, and they are thinking that this is a time to sell, to cash out as much equity in their home as possible to be able to sustain their financial situation. So we have seen a little bit of that. Even today, this being Saturday morning, I manage our inside sales team, and I've been checking in with them just to see how showing requests and lead flow has been going. And I'll be honest, it's not much different than it was 3 weeks ago. We still have people wanting to see properties. We still have buyers asking questions about what the market is doing. And we've really taken this approach on our team to not be selling, but rather be servicing. And if people are still wanting to buy and sell, it's our job to provide solutions and be very transparent about the options. And right now, it's more important than ever. Tony Robbins says, proximity is power. And Jennifer has done a really great job at aligning this team with some of the best vendors in the industry. We have the very best loan officer, Lizzie Hofer, that has been keeping us updated like a news anchor, 3 times a day about what's going on with interest rates, what's going on with the liquidity in the banks and the market. If there's anything that she can be doing to give our buyers an advantage as it comes in the way of loans. And she's super transparent. I mean, she is also coming servant and perspective. So do I think that things are going to slow down a little bit? I mean, I'm not being overly optimistic. Absolutely. We're huddling with our agents on a daily basis. I'm kind of like running a hotline over here with questions that are coming up about the current situation. But I mean, I get those types of calls on the daily basis from our agents anyway. It's just the questions that we're having are now more so centered around coronavirus. So far, I think we've only had one listing appointment in the works and I won't say they canceled, they're just postponing the listing appointment to really kind of see what's going to happen with all of this. And do I think that we are going into a recession? Yes, but let's not overemphasize what the word recession means. Recession just means that there's a slowdown in the economy. So I think a lot of small business owners, even people in real estate, it's kind of like when things like this happen, are you going to break down and go crazy? Or are you going to build a dam, right? Building a dam and really controlling what's happening, helping control the situation, not controlling other people's emotions, but not feeding into the hysteria. And as that dam starts to build with more and more water, at the end of the day, you will actually be able to produce more energy to provide better results. And I've been with Jen since, gosh, how long has it been, Jen? 2015. And yeah, one of the reasons I've stayed with you is because when everybody runs right, Jen stops and she's looking at the situation and she's looking left to say, okay, everybody's running right. Why shouldn't I be going left? Mm-hmm. And I mean, Jen has really decided that we're not lambs in this industry as leaders. We are lions. So like let's really look at all of the facts. Let's have a very realistic perspective about the situation. And our job, and I think we're doing a really great job of that right now, is just informing the public, putting the facts out there, and guiding our buyers and sellers with the right thing to do.
And we have a couple questions, Christine. Before we head into that, I wanted to share the most current news. I actually just got this, and I won't share my screen because I don't want to disrupt this talk that we're having here. But the good news for here in Arizona, we are number 49 on the list for all 53 territories and states that have been affected by the coronavirus. So right now we're at 78 cases. So one person in every 93,000 per 371 have been affected. We have New York, Washington, Louisiana, DC, New Jersey, Guam, Colorado, Massachusetts. Those are leading the list. Those are like the top 10 states here in the United States. We have one of the lowest states for cases. And I do believe positively in vitamin D, because I actually used to live by the beach, and believe it or not, we don't see as much sun there because of the cloud cover. I've loved vitamin D for my just uplifting of my mood. And we also know that vitamin D is really good for our health. So, but just kind of just an update on where we're at currently on the virus. And then also one thing I want to point out before I want to dive into some of these questions is more millionaires are made in a down market than an up market. There are a lot of opportunities right now that are popping up. And instead of playing into the fear and the hysteria and kind of letting that paralyze you, taking a step in a moment, because even Tim Ferriss, I was listening to his podcast today, even Tim Ferriss, who I really look up to, definitely gets scared. And he said that he's had problems sleeping. So not to say that this doesn't scare me or I have fear, because absolutely I do. But when I do, if I'm cognizant of my mindset and then I actually focus on the opportunities, I get pumped. Because right now, if I'm quarantined, I'm not taking it as a break for a nap. I'm looking like one opportunity that I see, more supply, or maybe we want listings, or maybe I want to get a good deal on a house. There's a lot of Airbnb owners that no longer want to be Airbnb owners. So maybe we target them and send a letter like, hey, are you looking to sell? Maybe I can pick up a rental property for myself. Maybe I can pick up a listing to deliver for my buyers. And that's just one of very many opportunities. But as a leader, I am looking for those opportunities because I not just have my own family to think of. I have 25 people that trust me with their livelihoods, and I have their families to think of.
Yeah,
So
I'm surprised by some of the memes that people are talking about all this extra time they have on their hands, and I'm like, what extra time?
I worked harder the last week than I ever have before. But if agents that are watching this, content.
Yeah.
This is a time that you can be learning. This is a time that you can be getting on the phone, just asking your clients how the heck they are. Sometimes we get so busy, we don't do that. And and we really do care about our clients, but sometimes when we get busy, we just don't call enough. People are home right now, call them. Make video content. Work on your business plan. There's so much that we could be doing with our time that's proactive and not reactive.
Yeah.
Okay, so do you want to say one more thing, or I'm just going to jump into some of these questions I'm getting here?
Yep, go ahead.
Carolina asked, are we really looking at lower rates? Right now, there's instability there. And I know my lender is on here. Lizzie, if you can type any comments into there and I'll help answer that question. But I can tell you from what we're seeing, there are tightening some guidelines on jumbo loans. We have seen interest rates go up for some people from 3 to 5% just this last week. However, I know that we're still in that fluctuation where they're going up and down because for most of our buyers, they have not gone up like that. But the down payment assistance programs, interest rates have gone up. But we should definitely start seeing where the interest rates are going to be going over the next week or so. But it's they've been going up or down, and the Fed did lower the rates to 0, which doesn't mean that interest rates are 0. It's actually that has more to do with credit cards and auto than home mortgages. We actually saw the interest rates peak up this last week, but still, if you compare it to historical rates, yes, we are much lower than historical rates. We'll probably see all of that come down once things start to stabilize.
Yeah, and as it pertains to rates, we have one buyer right now who they didn't have their rate locked in, and they were floating, and they got near to close of escrow. When they went to lock the rate in, it was higher than what it would have been previously. And now they're just really on the fence if they're comfortable with what that new mortgage payment looks like. So I would say, if you're a buyer or you are getting into the market to purchase, if you get quoted an interest rate that gives you a comfortable payment, and obviously I would recommend that you do consult with your lender, but I would say lock it in. Don't be a floater, because it could turn around to bite you in the what.
We have also seen delays with getting loans closed. And let's back up a little bit to before the previous weeks leading up to Corona. There was a huge spike in refinances because the interest rates had dropped to below 3%. And everybody wanted to refinance at the same time everybody wanted to buy. So lenders were already understaffed as it began with. Then we went to the Corona with new guidelines and things changing. And so lenders have had a very tough week as well. Oh, and Lizzie just commented, as it regards to rate, the market is extremely volatile. The banking system is stressed, and rates are no longer at the recent lows that we were seeing. Many economists are predicting that rates will go down once the Fed is able to stabilize the economy. I would anticipate this to be in the next 2 to 3 weeks. Thank you, Lizzie. Love you. Kevin George asked, do we have any insights into government plans to suspend foreclosures and evictions, and any possibility this will apply to private landlords? I'm not in property management, but I have seen that we have temporarily suspended evictions and foreclosures, and that is temporary because if and I don't know how long this is going to last, so it could be week, 2 weeks. Good news is China had, if you actually look at where the Wuhan, the neighboring country of China, they were first. The first outbreak was, I believe, January 24th. They went into extreme lockdown like we're doing here, and within 1 month they had it contained with no new cases and no. I think the mortality rate was pretty low in that country, and I don't remember what it was, but they had it completely contained within a month. So I can't, and I'm hoping, because don't know, but I'm hoping that if we do go in quarantine and we see that, the good news is the mortality rate is going down with every new case we have. So when we have all the new cases hit, because now we're testing, the mortality rate went from like 1.9% to 1.3%. So to keep it in perspective, 98.7% of people recover from this. And the people most susceptible are, really should be taking extra precautions. The elderly and people with compromised immune systems, and people with any kind of respiratory infection or like asthma would be somebody. So they're talking about a mortgage forbearance program. So this is mortgages, not rentals, for up to 12 months. But a lot of this is just not anything set in stone yet. So if you can show that you've had a hardship, like you've lost your job or your income went down, and you could show that to the bank, they would defer the monthly payments until the end of their mortgages. So we did see this a lot in 2008 and 9, and I helped people, assist them with the resources they can help with loan modifications. which is something that also is a benefit of home ownership, because they're not going to, well, I can't say they're not going to, because who knows, but they're not going to indefinitely put this where the landlord's not going to be able to evict you. So if you're in your home and you have your mortgage, you're probably going to have a lot more likely to be able to work with your mortgager than you are your landlord.
Yeah, I would say be careful with that, because during the short sale crisis that we had in 2008, 2009, even though some people, depending on how the loan modification worked, if you were able to defer your payments, if you deferred your payments for 5 months, then some people had to pay all 5 months due all at once. And I can imagine that would be very difficult for some people. And when they were able to do that, is actually the event that spurred them into foreclosure. So I would say if you can continue to make your mortgage payments and be paying your bills, I would say that that is probably the best thing to do.
Well,
And be asking for that.
Is more, and this is what Lizzie just commented on, is they're actually not making them pay that in one lump sum. They're actually just adding it to the end of their mortgage. So if 1 year you didn't pay any mortgage payments, just not that like your bank's going to allow you to do that, your 30-year mortgage is now a 31-year mortgage. So you're paying it over a longer period of time.
Yep. Just make sure you're reading the fine print on, this kind of stuff. Tax deadlines. I think our current government is doing what they can. And I definitely think that as far as it comes, I've heard a couple of slogans, while coronavirus is looming, the housing market is booming. So we've had a couple of people that are investor type minded clients that have been wanting to lowball on houses, like a list price at 400,000. We've had people say, "Oh, let me submit an offer for 150,000." We're not there yet, so I don't know if we ever will be, because it, like Jen said, it's really going to be a while before we're out of an actual seller's market.
I got another question about real estate agent incomes will be affected. Do you know if the government will be trying to compensate commission salary-based jobs? There's been announcements, and if anybody wants to chime in here on the small, I know that they've allocated a large sum to help small businesses, and which is good, because in 2008, the only help was for Bank of America and all the big corporations and GE, and the small guys got no help. This administration's taking a different approach and actually helping small business owners. Exactly how it's going to help and how that's going to, how much money and what that process looks like, I don't know. But I also know that I am not going to be relying on the government personally. I am a proud libertarian, try not to get political, but I've always looked to find my own way. And if there is help, great. And I really, really feel for small businesses. I just, just came from outside boot camp. We kept 6 feet distance. Kim Pinzini, who owns Jabs, they just closed their doors yesterday, and they're getting hurt. And so she is looking into what assistance is provided, and she's already started that process. So I'm glad that that's there for them. Restaurant owners, there's so many businesses that are getting affected right now. And I'm trying to order takeout from the businesses that I really love until they don't allow us to do that. But a lot of this is so new. We're still seeing like how it applies to us, and it's hard to keep track of everything new, especially when you want to protect your mindset and not be connected to the news all day long. And I know as we approach, I would love if anybody has any questions, just drop it into the chat and I'll answer it here. But I also want to end this with mindset and health. And if we're going to be taking a moment, you guys, I had some very disturbing news that somebody I care very much about, try not to get emotional, that got diagnosed with cancer yesterday. And it hits home for me. And I feel for people that are dealing with health. And for me, I've had ulcerative colitis for 15 years and suffered from it. And I did a deep dive into health and wellness. So with anything, if we're going to take a moment to want to focus on our health, let's not just worry about this virus, because this virus, don't get mad at me for saying this, but this virus is going to affect very few people we know. But cancer affects everybody that's on this, that's watching this right now, has probably known somebody or have known hundreds of people that have suffered or died from cancer, and we're going to know hundreds more people that are going to suffer and die from cancer. And cancer, we can prevent it with the food we eat, the fitness that we have, meditation, vitamin D. So if we're going to try to be a healthier population, now's the time. And let's not let this this virus could be a good thing where we can really pour into what are we doing for our own health, and not just physical, but mental, because we now know that we have two brains, one's in our head and one's in our gut. And we cannot heal our head if we can't heal our gut. So if we heal our gut, and inflammation is the source of every single disease out there, and it is also the source for coronavirus. Dave Asprey just had a podcast. I would say, if you know Dave Asprey of the Bulletproof Company, on a lot of different things that you can proactively do to help prevent yourself from this virus. And a lot of it is just attacking inflammation. My disease that I've lived with is inflammation based. The medication I took for 15 years did not help me. I no longer live on medication. I no longer have symptoms. I also, because when I suffered from ulcerative colitis, I was also caused me to be depressed. I no longer live with daily depression, and I'm not taking antidepressants. I've done this through nutrition and fitness and supplementation and meditation, and taking a moment for ourselves. So if anything we can do, even while quarantine, go into your backyard, go into your family room, shut the world off, meditate. So maybe we should be investing in some like headspace stock.
There's so much going on right now that we can't control, just getting back to the things that we can control. Mm-hmm. And in the moment, it may seem and feel like there's not much that we can control, when the reality is there is so much that we can control. And what we can control right now is going to have a direct impact on how we handle this next week, how we handle this in the coming weeks, how the people around us are going to be handling this. If we're making healthier food choices, we can be an influence to other people around us. If we're deciding how we're going to be contributing to the economy, sustaining or tanking more quickly, these are all things that we can control. And I've definitely been through some mindset slumps too here in the last couple of weeks. And it's a decision to not sit there. Like, do not allow yourself to sit there. You know, I think we'd be joking ourselves if we tell ourselves that we'll never be in that place again over the next week or the next coming weeks, or God forbid, the next 2 months. Right. But we just can't allow ourselves to sit there. And Jennifer has been on this health train for a very long time, and it's been a very positive influence on the rest of our team. And I'm really excited, just as a personal friend, to be reaching out to you and be learning more about that, because when I'm clean eating, when I don't have this inflammation diet in my system, I don't have brain fog. I can think more clearly. I can make better decisions. I can make decisions more quickly that's going to impact me and my family. I have sustained energy to be able to take advantage of the opportunities that do exist. Depression creeps in slower, not to say that it isn't going to try to find its way in at all, but taking care of our body is taking care of our mind, and that is absolutely what we're going to need right now to get through these times that we're up against.
My mom just commented, and it was interesting because Dr. Daniel Amen, he is the leading neurologist neurologist or psychologist, but he's done more brain scans than any other doctor in the world. And as he was doing brain scans of people that pray and meditate, and prayer and meditation are very similar, and that whole point is to shut the whole world out. He said, instead of having the brain shut down, you would think that's what it was doing. He said the prayer lit up all areas of your brain more than when you're just not, when you're, like we're talking right now. If they were doing a brain scan as we're talking right now, my brain would not be lit up than when I'm in the sauna and I'm praying and I'm meditating. And one thing I will say is I've prayed multiple times a day, not just for myself, but for other people, because I know this is affecting our community. And to kind of bring back of what else we can control is, how can we help our community out? Instead of attacking each other right now, do you remember how it felt like in 9/11 when we felt so bonded, like we care about each other? And if we go on social media and we start arguing about your opinion on the virus, or you're against it, you're for it, or whatever, it's not the time. It's the time to understand, to be compassionate, to show empathy. And we're all dealing with our own story. We're all dealing with a lot on our shoulders. And I feel like I have the weight of the world on my shoulders because I care about every family that works for me. I care about all my clients. I care about my friends and family. I care about my son-in-law whose hours got cut this week. I want to help where I can. And while I can't help everybody, I can say I'm a damn good problem solver. And if I can't help you, I can at least try and connect you with somebody that can help. So if we really just put that positive messaging out, this can be the trajectory where we're not going back as a human race, we're moving forward as a human race.
I think that's a really good place to end.
Yeah. Well, guys, thank you for joining us today. I really mean it. It's not lip service. I truly care. And I'm not taking this lightly. I'm not taking this as a chance to watch the next Netflix binge. I'm taking this as an opportunity to lean into my family, lean into my kids, lean into my husband, my friends, my family, my clients. And I'm going to come out of this much further ahead. I like to refer myself as a cockroach because I can survive the worst of the worst. And if we're all aligned together, and I have some amazing mentors here at eXp Realty that I'm like, know that the last time the market crashed, they really grew their market share, they grew the business, and they were thriving in these times. So we can choose to survive, or we can choose to thrive, and it all starts here.
All right. Well, if you want to get in touch with either one of us, just DM us. We are going to be doing a ton of stuff with people that are in the real estate industry, small business owners. And if you are just somebody who's struggling and watching, reach out to us. Jen is in Arizona. I'm here in Orlando, Florida. So we're definitely really trying to make things happen in both places.
It looks like we're getting a lead call right now. Yeah, and we will be monitoring this every day. We're finding opportunities. So if you're an agent, if you're a buyer, if you're a seller, if you're an investor, reach out to us offline and we'll tell you what we're seeing right now, because there were some major announcements with some big buyers pulling back from buying, which is great because that could mean a lot more opportunity for us. Right. Thanks for joining. And if you're here in Arizona, go outside, feel the sun on your face, get some vitamin D, and be grateful that we have this opportunity to reflect and pivot.
Thank you.
Thank you.